What's up, everybody, and welcome back to Wall Street's weekly group therapy session earnings season, where billion-dollar companies tell us why they're fine. We pretend to believe them, and then the market either hugs them or throws them into traffic. This week, we had 5 companies give us financial foreplay, followed by either sweet nothings or just nothing at all. Let's go ahead and dive straight into it. So first things first, we had Monday.com, aka hashtag MNDY. So Monday.com reported earnings, and it's kind of the Monday that makes you wish it was Friday. They beat on EPS $1.09 versus 84 cents expected, and revenue came in at 229 million, topping estimates. But then in Q3 guidance, they basically said, yeah, don't get too excited. Q3 revenue outlook 311 to 313 million. Wall Street wanted more, and the stock promptly face planted 29%. Margin shrank, GAAP operating margin went negative, and free cash flow margins dropped. So they made money, but somehow became less profitable. This is like running a marathon faster, but still coming in last because everyone else was on bikes. Investors didn't just sell the stock, they torched it. We had BigBear.ai also report, another AI stock with a name that sounds like it should be cuddly, but instead mauls your portfolio. They're still trying to convince investors that there is a bright future, but Wall Street's starting to wonder if that future has an actual address attached to it, because again, we are out of the hopium phase of AI and into the where are the results phase. Earnings came in with some revenue on softness. And while they talked about strategic contracts, investors were like, cool story, bro. Show me the money because I don't give a shit. The stock reacted like it just saw Chat GPT in a bear costume, confused and a little disappointed. Now, next up, we have OKLO. OKLO, the nuclear tech darling that's still pre-revenue. They didn't drop any earth-shattering numbers because, there aren't any yet. So instead, they reminded us they're still building fast fission power plants, recycling nuclear waste, and trying to make uranium sexy again. They held a call to talk milestones, regulatory steps, and that they're the first to get a DOE site use permit for, advanced reactors, which is great if you like PowerPoint slides more than profits. But look, they might change the world in 10 years, but right now they're just a guy at the party telling you how his startup is going to totally disrupt energy, bro. Like, just listen to me. While he's still living in his mom's basement, by the way. Now, we also had AMC, the company that made people millionaires and changed lives forever, but the meme stock movie theater chain that just pulled a plot twist better than anything Hollywood's written in years. They were supposed to lose money this quarter, instead break even. 1.40 billion in revenue versus 1.35 billion expected. Food and beverage sales hit $7.95 per guest, a company record. Apparently, people are paying more for popcorn than for actual movie tickets now. Admissions revenue per patron top $12 for the first time. This isn't just a recovery. This is a Tarantino level comeback. They invested in premium seating, fancy sound systems, and now it's basically a spa day with a Marvel movie. Stock popped 12%, and yes, the retail ape army is doing victory laps on Reddit. But remember, they're still down 42% year over year, so maybe save the champagne for after the next Marvel sequel. We also had Plug Power, the final one, the hydrogen fuel cell company that's been just about to turn profitable for, forever. They lost 20 cents per share versus 16-cent loss expected. Revenue 174 million, up 21% year over year. So growth is there. Margins improved from a horrifying down 92% to a merely bad down 31%. Progress is progress, folks. And margins improved, and management says they'll hit gross margin break even by Q4, thanks to cost cutting, better hydrogen pricing, and something they're calling Project Quantum Leap, which I'm assuming is a time machine to when this stock was worth more. Investors sold it off by 6%, probably because they've heard the "will be profitable soon" speech more times than they've heard hydrogen is the future. So there you have it. Monday.com had a Monday from hell. BigBear.ai is still wandering the woods. OKLO is building the future on PowerPoint. AMC is serving lobster with your IMAX ticket. And Plug Power is promising a hydrogen-fueled utopia, just not yet. The market giveth, the market taketh away. And somewhere in between, retail traders are arguing on Twitter about short squeezes. We'll see you next week or tomorrow, honestly, when another batch of companies tries to convince us that long-term vision is worth the short-term breakdown. If you stayed this long, make sure you like, subscribe, and leave a comment of your favorite earnings play this week, and we'll make sure to cover it on our recap. See you guys in the next one. Have a great night.